Hello dear traders, I'm Maria Stradup and this is the review of crypto analytics from fx.co. It's the 3rd of February, today Friday, and as it's the end of the week, of a trading week, we can make a sort of conclusion. So this week was full of important macroeconomic events, and of course the most important event was the Fed meeting on 1st of February. And today I will discuss what were the results of the meeting, how they affected the cryptocurrency market, what to expect from cryptocurrencies next, and of course, as usual, we will have a look at technical picture and forecasts for both Ethereum and Bitcoin. And we will start with Bitcoin, and first the results of Fed meeting and the article by Artem Petrenko. During the meeting, the Federal Reserve confirmed market expectations and raised the key rate by 0.25%, thus giving reason to believe that the easing policy is about to end. After the February meeting, the key rate reached in total 4.75%. And now the probability of the same rate increase, 0.25% in March 2023, is estimated at 82%. Also, leading investment analysts believe that despite officials' statements, the Fed will begin lowering rates as early as this year. Fed Chairman Jerome Powell said that despite the success in the fight against inflation, a rate hike is appropriate. This means that it will reach at least 5%. At the same time, the official acknowledged that a deflationary movement had begun, and he still supports the decision to cut the rate in this year. However, he noted that following the results of March, the Fed will review the policy of raising the key rate. There is no denying that his words are sounding more positive, Tom says, despite his reserved manner of communication. And in the medium term, the market should expect inflation rate to continue to decline and a slowdown in the quantitative easing policy. This means that investments flows, including into cryptocurrencies, will increase significantly in this year. And another important signal for this was the updated forecast of the World Bank, which expects the global economy to grow by 2.9% in 2023. Okay, and now let's get to technical picture of Bitcoin. Let's have a look at the chart. Bitcoin completely absorbed bearish volumes from January 30th, continued its bullish run, and as of yesterday it reached the 24.2 resistance zone, and also it broke through the 22.9, 23.4 consolidation range. Meanwhile, technical indicators, as we can see on the chart, are moving sideways, indicating a decrease in buying intensity. However, this is a temporary consolidation that will lead to a retest of the 200 zone. Bitcoin proved that there will be no corrective movement in the near future. So as a result, Artem says that the positive results of the Fed meeting suggest that Bitcoin is preparing to update local high. Buying and on-chain activity continues to rise. Thus, we should expect an update of the local high around $25,000 in the near future. Okay, let's have a look at the chart for the moment. It's the 3rd of February today, and Bitcoin opened today at 23,577, and now it is trading at 23,536. Well, so far it hasn't reached the new local high. It's above that very consolidation range. However, it hasn't reached the resistance zone. Well, anyway, 2 days, 2 weekends days are ahead, and things will change, and we will see how they will change on Monday. But that's not all so far, and now we'll move to another article by Sebastian Seligam and Ethereum. But first, some crypto news Sebastian provides, and news about investments. We have already mentioned the investments inflows that are supposed to be this year, and here Sebastian writes that asset management firm Divya Group says 82% of millionaires surveyed have asked their financial advisors to add cryptocurrencies like Bitcoin to their investment portfolios. Divya Group, a global financial advisory and asset management firm with $12 billion worth of assets traded worldwide, has released the results of its cryptocurrency survey. She found that among her millionaire clients with $1 million to $5 million and investable assets, 82% sought advice on investing in cryptocurrencies. And Divya Group survey participants are not the only ones who are positive about Bitcoin. A recent study published by Nickel Digital Asset Management found that institutional investors expect 2023 to be a good year for Bitcoin, with 65% of surveyed institutional investors agreeing that Bitcoin could hit $100,000. Well, we will see. And now let's get to the technical picture of Ethereum. Let's have a look at the chart. So Ethereum market had broken out from the triangle price pattern and made a new local high at the level of 1,695. The next target for bulls is seen at the level of 1,788 September 2022 high. The nearest technical support is seen at 1,525 and 1,487. The key technical support is located at 1,350, and only clear and sustained breakout below this level would change the short-term outlook for bearish. Please keep an eye on the 1,487 technical support, as any violation of this level would likely extend to drop towards 1,345. But in order to do this, the volatility must increase significantly. So his trading outlook is the following. The key technical support for bulls at 1,281 was broken already, and the new swing low was established at 1,074. There is a clear test of the level 1080, so any breakout below the moving average and the weekly candle close below moving average will be considered as another indication of the downtrend continuation. If the down move will be extended, then the next target for bears is located at the level of 1,000. Okay, let's have a look at the chart of Ethereum for the moment. So today is the 3rd of February, and Ethereum opened today at 1,648, and now it is trading at 1,642. It's really close to that very local high, 1,695, and it's above both technical support levels. Well, so far we can see that it's moving upwards, but again, we will see the real picture on Monday already. And well, I wish you, as usual, very nice weekend, profitable trading. Please write your comments and questions down below. Until next time, in our next review on Monday. Bye.